Some of the important 6 marks I've made again so that I can explain and you can get the idea how easily you can write. Classification of receipt. Receipt means receivables of government. It is classified into two: revenue receipt and capital receipt. Revenue receipts are those receipts which is a kind of source of income, okay, and which not create any kind of liability or reduce financial or increase financial asset. So receipts of government is of two: tax and non-tax payment. So what is tax? Tax is of like direct tax and indirect tax. So direct tax examples are income tax, wealth tax, and indirect tax is of like GST, custom duty, excise duty. Okay, non-tax is like interest received, dividend received, fees received, grant received. So that will all come under receipts. Capital receipts are those which can create liability or which can reduce the capital, reduce the asset. Such kind of receipts are capital receipts, like loan, sale of share, etc. So these kind of receipts are again divided into two: death and non-death receipts. So which creates death, like loan which we have to pay and we have to pay interest and we have to clear debt, so it creates death. Okay, and non-death is like sale of shares, so it is reduction of asset. So if you write this much also, surely by writing good quality points you will get surely 6 marks. Now I have another question here. In fixed exchange rate, government fixed exchange at a particular level. How the government fixes the exchange rate, foreign exchange rate under fixed level. So market is determined exchange rate. So market has determined this exchange rate where demand is equal to supply. Now if the government want to increase export, then wantedly the government will increase the dollar value, so that the price will change from E to E1. So here what will happen, we'll have excess of supply of dollar and less demand of dollar. Okay, on this time the excess supply the government will keep it as reserve, and when government want to increase our rupee value, then government will decrease the rupee value of dollar, like $1 is equals to 30. By this what happen, we'll have excess of demand and less of supply. On this situation, the government, whatever the reserve the government kept in the last holding, that it will release it here, or else the dollar has to be supplied in a black market. So in this manner the government fixes the foreign exchange rate in a fixed exchange rate. So when government is increasing the currency, it is called as devaluation of Indian currency. When government is increasing Indian currency when compared to the dollar, it is called as valuation of Indian currency. Okay, this is very important one. I hope this surely gonna help you. Next question is calculation of GDP under 3 method and getting same answer. So 3 method is production method, expenditure method, income method. Production method, sales minus intermediate good. So to firm A produces cotton with no raw material and sell to B. B has bought for 50 rupee raw material and produce a cloth, and that cloth the firm B sells to a consumer for 200 rupee. Now under product method, what is the formula? Sales minus intermediate good. So 50 minus 0, firm's A product is out of 50 rupee. Firm B is 50 minus intermediary good. Firm B product is 150. So 50 and 150 we get total 200 rupee under product method. Second we have is expenditure method. A consumer is spending 200 rupee in order to purchase that cloth. So 200 rupee under expenditure method. Income method, firm A earned 50, gave 20 wages and 30 as profit. Firm B earned 150, paid 60 as a wage and 90 as profit. When you add the wages of both 80 and the profit of both 120, again we'll get the income also 200. In this method we'll get same answer. So what is long run supply curve? What is long run shape? Okay, the shapes of long run curves. In long run, as we don't have any fixed and variable one, so we'll have only two things we'll consider. One is LRMC and one is LRAC, and both is U-shaped. Okay, so the cost per unit of output in long run is LRAC. The additional cost for the production of additional output is called as LRMC. And then LRAC is U-shaped. LRMC and LRAC are same in first LRAC falls, MC falls more than AC. AC rise, MC rise more than AC. Why it is happening? Because of increasing return to scale. When increasing return to scale, the cost will be less and output will be more. And after this, here we have the constant return to scale, where how much of the input you contribute, that much of output you will get. Okay, and then we have increasing return to scale, where the decreasing return to scale is happening because the more the cost but less the output. So in this manner we have LRAC and LRMC curve is U-shaped. When AC is falling, MC falls more than AC. When AC is increasing, MC increases more than AC. It is all due to the increasing, decreasing and constant return to scale. That is what you need to write. I hope this surely gonna help you. At least you can attempt, and you can, because for the diagram itself you will get 2 marks, and based on to this points you will get 2 marks. And by writing the concept why they are getting U-shaped, it is because of increasing, constant and decreasing return to scale, you will get 2 marks. So students, when the question derivation of demand curve in case of single commodity, only what you need to do is 2 things. One, you draw a table which is demand schedule, and then grammatically you just have to represent it. Okay, graph. Okay, one, when price is high, demand is less, and when price is less, demand is high. The same thing what you need to do it here also. When price is high, demand is low. When price is low, demand is high. Okay, after that, what the explanation you need to write is, other things being equal, but the law of demand has opposite relationship between price and demand. Price and demand. What are the other things being equal? Income, taste and preference. Okay, price of the substitute, that all other things remain equal. What is the opposite relationship? When price is high, demand is low. When price is less, demand is high. After that, you need to give explanation of table and explanation of graph. When price was 100, demand was 1, and when price was 10, demand increased to 25. In graphical manner, what you need to explain, OX represents demand, OY represents Y. When price is high, demand is so and so less, and when price is less, demand is so and so high. But don't skip any question. Try to attempt all 4 of the questions without leaving it, and try to write how much, what is what you know. Okay, but don't skip any questions.